Live with another quick tip Tuesday, each and every Tuesday at 8 p.m. Eastern Time. This week's topic is repairing your credit. Why credit is so very important. It's probably one of the most important things in the finance industry. Credit is key. Credit is the best thing you can have. Credit is the best tool you can have in your toolbox. Credit is almost everything in this world, so keep that in mind. Credit is everything. There's many different ways to fix your credit, so there's not one size fits all. So keep that in mind. What worked for one person may not work for another person, so just keep that in mind because there's a lot of different avenues to credit. There's different bureaus. There's different ways that the credit bureaus calculate your scores. They can be utilization, the history of your credit, how many inquiries you have. There can be what type of credit lines you have open. So there's not one size fits all. There's definitely late payments that could be impacting your credit. There can be bankruptcies. There can be foreclosures. There can be a lot of different things impacting your credit. So keep in mind, there's not one size fits all. When it comes to repairing your credit, educate yourself. Like anything else, educate yourself first. Because a lot of times, a lot of people think it's one size fits all. It's not one size fits all, so keep that in mind. Credit, I see some questions. What is a good credit to have? A good credit to have can depend on exactly what you're looking to buy. If you're looking to buy a house, you can get an FHA loan with a 620, maybe even lower depending on your history and other criterias. Conventional loan can be a little higher. When you're going for a car, depending on certain criterias, you can probably get a car with a lower credit score. But definitely a good credit score to have is at least 720, 740 and up. That's you go into the A1 credit score. So basically, you're getting better rates. You're paying less monthly payments, lower monthly payments. So it's another reason credit is good. The better credit you have, the more money it can actually save you. So definitely keep that in mind. Do all loan types look at the same credit info? No. So for instance, the bank may look at a different credit score, different level of credit than the car loan, or maybe a bank loan, or maybe a personal loan somewhere else. So there's you gotta think of it like this. You're getting the bigger the loan, the tougher their credit. They criticize you basically to make sure you're able to pay that loan back. A mortgage loan is higher payments. So definitely keep that in mind. Not sure if it's just me, but I do not hear you. Hopefully. How about now? Everyone can hear me? All right. So yeah, there's definitely, hopefully everyone can hear me. If not, just let me know. There's definitely different criterias when it comes to credit. So definitely keep in mind you're going for different type of loans. They definitely look at different criterias. Of course, mortgage, the hardest one to get, is usually they look at harder criteria to make sure you're able to pay that debt back. So definitely keep that in mind. If you're looking for like a credit is everything. You're looking for a business loan, you can utilize to open up your business. You'll need credit. There's different credits. There's a personal credit and there's also business credit. So you can have two different credit scores. You would need your personal credit to start up your businesses, and then once that business credit starts increasing, you don't typically need your personal credit. So it's always good to have good credit. I have no credit. Is that bad? No credit. Yeah. So you have no credit history. So the it's tough to really make a decision on you if you're able to repay that loan. So what I would suggest for you is try to get added to someone that has a longer credit history. If they have a good standing credit card that has low utilization and they opened that credit card many months ago, many years ago, see if they're able to add you to that loan so that you will build that credit history, and that should be able to help you try to build secure credit cards, and then over time you're able to build that up quicker than someone possibly with bad credit. I have another question. I thought cash was king. Cash is king, like an infamous credit repair person said. Cash is king, but credit is the queen, and we know who rules the castle. So it's always good to have credit, leverage your money. The name of the game is leverage, but don't over leverage. Make sure you're utilizing credit wisely, and the best credit to have is someone else paying for it. So basically, you're getting an asset with it. You're having someone else pay for your credit. For instance, a rental property, your tenants are paying for that. For instance, if you're in the Turo game, which is like the Airbnb for cars, you're renting cars out. If you're getting a loan out on a car, you're renting out that car. You're having the people renting the car paying for your debt. And then the good thing about that is when that's not being rented, you can use it for personal use. So always try to have good credit where someone else is paying for your debt. That's the best debt to have. And also, if you're getting a personal home, a personal car, you can have these different income streams paying for that. So you're getting that debt, but you already have that new debt covered. Should I do my own credit repair? I would say definitely educate yourself before you get into that credit repair for yourself. It can work, it may not work, but definitely educate yourself. You would have a bigger chance of improving your credit score. Just don't assume something will work. Look at the full picture. There's a lot of free credit reports out there. You can get a free annual credit report. So always monitor your credit. You know what you do within your life. You know what type of loans you have, what type of debt you've paid off, maybe not paid off, maybe late payments, maybe no late payments. Maybe there was a situation where you were in communication with the lender, and the lender said they were not going to make a late payment because it was out of your control, and they still marked a late payment. That's actually a recent transaction I had, and they still marked them late. So he was able to communicate with the lender, and they were able to remove that late payment. So always monitor your credit, educate yourself, see what's going on, your full picture, and then if you're stuck or if you don't know what's going on, go to a credit expert. If you're going to buy a house, I work with my clients. I see what's going on with their credit. And most of the times, it can be a quick fix. It can be utilization, making some payments, and it can improve your credit score. Other times, you need to work with an expert and that will take time, of course. You would have to maybe do some deletions that weren't you. Maybe you have too many inquiries. So there can be a lot of different flavors within credit repair, but definitely educate yourself first, because the more you educate yourself, the more you know if someone is not in your best interest. So you can just talk to someone and just keep saying yes because you don't know what's going on. So it's always good to educate yourself first and then talk to an expert and see, and then you can select the right expert because you did your own research first. I love the questions today. I'm probably going to take one more questions because I want to keep these short and sweet and to the point. Let me just make sure I covered all the topics. If you're in a business and you don't have a good credit, make sure your credit is good because you can utilize credit, leverage credit. You can take out loans, use it to build your business, build your properties, and then once you pay that off, your credit score will go back up, and you could rinse and repeat. So use credit to your advantage. Looks like, how long does it take to close? What does that mean, close? Exact close which? I see one more question. How long does it take to close? If you mean close in a house, each scenario is a little different, but typically 30 to 45 days if everything goes smooth. But if there's a certain situation within the house or within the transaction, that can delay the process. Make sure you're getting debt that other people are paying for. Yes, so to do a closing, yes. It can take about 30 to 45 days, but it depends on the transaction. Some transactions can close under 30 days, and some can last more than 60 days. So it just depends on the transaction and depends on the whole scenario. If you're looking to need help with any properties or closing, just reach out to me. I'm more than happy to assist. Everyone have a great rest of your Tuesday. And if you have any topics for next week's Quick Tip Tuesday, just let me know. All right.